Welcome viewers. On behalf of Iravati Research and Communication Center, this is Pratim Ranjan Bose. As you are aware, Ukraine crisis and the resulting instability has widespread impact. In this edition, we will discuss about Bangladesh. From Bangladesh, I have with me Mr. Absal Shaquib Quoreshi, the founder of Dhaka-based Business Intelligence Limited, a platform for market research and industrial information. Mr. Quoreshi studied quantitative economics from Baruch College in New York and MBA Finance from Institute of Business Administration, a very premier institute in Dhaka. He worked in various positions in abroad and in Bangladesh and has been fellow of distinguished research institutes and worked as consultant to top multilateral agencies like World Bank, ADB, etc. Welcome, Mr. Quoreshi.
Thank you, Mr. Bose, for your very kind introduction, and I'll be happy to try my best to respond to your questions. Please.
Thank you. Before the next part, let me tell viewers that Shaquib Quoreshi is a personal friend as well. So, we call each other in first name often. So we might do that going forward.
Yeah, of course.
Before we get into the discussion, here is a snapshot on Bangladesh and India-Bangladesh relations. As you know, Bangladesh is a top garment exporter in the world. According to ITC trade map, roughly 85% of countries' $52 billion export revenue in 2021 came from ready-made garments or RMG. Bangladesh's exports are directed mostly to USA and Western Europe. USA and Germany are largest buyers of Bangladeshi ready-made garments. India contributes 3% of Bangladesh's export revenue, China 2%. Bangladesh meets half of its import needs from China and India. At 30% market share, China is the largest exporter to Bangladesh, followed by 20% of India. As in 2021, Bangladesh was fourth or fifth largest export destination of India, depending on which data you use. The bilateral trade ballooned from less than $3.5 billion in 2010 to nearly $16 billion in 2021. Indian exports to Bangladesh nearly doubled to year-on-year basis to $14 billion in 2021. Imports from Bangladesh reached $1.7 billion. 12 years ago, this was barely $300 million. The business-to-business activity between the two nations increased manifold over the last decade. However, FDI flow remained weak. In 2019, Indian companies invested $20 billion worldwide, but only $116 million went to Bangladesh. Overall, Bangladesh attracted $2.8 billion worth of FDI from the world in 2021. India contributed 4%, China 22%, and UK 14%. With this, let's now go to the discussion. Shaki, first thing first, post-pandemic, how do you rate the prospects and problems of Bangladesh economy? And how did the latest budget, I think it was placed last week or so, address those issues?
Well, it's a very broad-based question. One thing, talking about the pandemic, we are fortunate that the initial forecast for the economic and trade-related devastation as an impact of the pandemic, those came out wrong. Initially, it was like 30% downtrend in the global trade, so many millions of job loss globally. Those initial forecasts by the IMF or UNCTAD or ILO didn't come out correct. the whole world is lucky. And after the initial shocks, say like in the first year, April, May, March, at least Bangladesh has been stable. But if the global economy is down, it has been down, then the trade prospect, economic prospect becomes down too for any country, because we are all connected. And in the last 2 quarters, the Bangladesh exports have shifted back to almost normal, though not quite at the pre-pandemic level.
For $52 billion as per ITC trade map, it has jumped. It has taken a huge jump.
Oh yes, the last published data. But before 2 previous quarters, it was still not, the growth rate was not as the pre-pandemic level. I'm talking the growth rate.
Okay.
But the total export revenue have come up good as of the last quarter, 52. So but again, in the last 2-3 months, the exports are suffering, especially after the Ukraine conflict, because the demand in the Western Europe have come down. And so once the COVID is almost over, at least the economic impact of COVID, the whole world is getting a rebound. At that time, the Ukraine conflict started, sending shockwaves throughout the world, including the currency, foreign currency, or like convertible currencies like euros and dollars, they are fluctuating. And there came the oil and gas price hikes and food supply crisis. So these three things are putting pressure on the global economy, and Bangladesh is no exception. And so it is difficult to make any reasonable forecast at this time, because we do not know that yet. When it comes to budget is just published, and Bangladesh is just before the budget. The statistics came out that Bangladesh has suffered a huge jump in the trade deficit and current account deficit. And particularly after the financial crisis in Sri Lanka and the subsequent political debacle suffered in Sri Lanka, people were talking about what is the situation in Bangladesh. And if you look at the budget, there is like from the annual expenditure, sector-wise annual expenditure, from the revenue budget is 19% in the debt service. 19%. Well, it's not only the foreign debt, it's also the local debt. The government borrowed from the banking system and through the national savings schemes. So the foreign debt plus local debt combined is 19% of the annual expenditure. It's not a small sum. And the trade deficit is a matter of concern. Also the fiscal deficit. If you look at the budget, it's a deficit budget, and the revenue collection target is pretty high. And without the reforms and without increasing the efficiency of the tax collection system or revenue administration system, be it custom duty, be it income tax, be it VAT, it is a big challenge for the National Board of Revenue to fulfill that target. So the risk, what I'm trying to say, the risk for coming up short from the revenue collection target is real. So the budget is already deficit, and if there is challenge in revenue collection, then how the government would be able to meet the expenses, that is a concern. that we need to consider.
Okay.
At the same time, traders or exporters are saying that there is a pseudo recession or kind of recession, not recession, but due to inflationary pressures, the European buyers have already cut down on their orders for the ready-made garments because they have to spend their income on more priority things. It's likely. So if we suffer export loss, then our trade will be suffering more.
I agree. Trade deficit, widening trade deficit, though, is almost a global phenomenon this year because
Yes.
of the higher, I mean, sharp or unprecedented. I mean, we have never seen a three-way volatility. Okay.
Right. It's the
So
petrol, it's the currency, and the freight.
exactly. And earlier there was a spike in energy commodity prices, but not in food. Now from everything has gone up. Everything
Right.
is impacted. So that is okay. But how is Bangladesh's record in meeting the revenue collection targets? India in the last fiscal, your fiscal year probably ends in July, right?
June. Starts
June.
in July, ends in June. Yes, okay. July to June.
So ours is April, March. And in April, March, our revenue collection, if you look at the revised estimate, so the revenue collection target revenue collection has been far higher than the target. And that had resulted a lower fiscal deficit, 0.2 percentage point lower fiscal deficit than earlier projected. So how is Bangladesh's record in meeting the collection targets?
It mostly remains in deficit. So at the end of the year, in the last quarter of the fiscal year, they usually go for a budget revision. They revise the targets. Depending on the progress in collection up to that time, they make a revision. But I was just looking at it in the last fiscal year, there was no difference between the revision and original target.
So they have mostly met the target last year.
Yes.
That's a good sign.
But this baffles me because due to Corona, it is the first year which falls into the first half of the fiscal year. I mean, the difference between calendar year and fiscal year. The many small businesses have suffered in a bad way. They are not in the position to pay taxes because they have owned up their businesses. They are wiped out. But at the same time, many of them are not in the tax net. We have very limited tax net. So the pressure was on the large businesses. Whatever they could collect, they did collect. And there is the VAT, since the VAT is a collected tax, and so it's mostly the tax. I mean VAT, constituting a major portion of the tax rate.
If I get you correctly, what you are saying is that the revenue side is the challenge. So yes, the fiscal deficit, maintaining the fiscal deficit is very important at this juncture, and ensuring that the debt does not go up beyond the level. Debt will probably go up. It is going up everywhere. But if the export revenue remains good, in that case, the debt to export, which is the repayment capacity, will be same. And if the economy grows as expected, so if the GDP grows, then things will remain under control. Now, we will come back to this point. But before that, let's go to something which is more related to India-Bangladesh. As I said in the beginning, that the Indian FDI to Bangladesh is barely 0.5% of India's outward FDI to the world. Now, we know that the two countries are in excellent relation and Bangladesh is a next door neighbor and the trade is so high. Normally, investment rights on trade. So the trade is so high. So that, of course, the FDI has gone up stepwise. If we see 10-year data, I mean, 10, 12 years ago, it was barely annually, barely in the range of $10 million, $5 million. So from there, it has gone up to $116 million is a rise. But Bangladesh's appetite has also grown substantially. If I look at the total FDI of $2.8 billion. Now, what is holding up higher Indian exposure in terms of FDI in Bangladesh? You know, from Indian perspective, I can say that I think even today I had a discussion on another forum, and Indian private sector doesn't get as much support as required to take the FDI there. I mean, this is mostly in terms of, for example, there are issues with project finance in Bangladesh. So this has to be arranged. Then there are some common issues like repatriation of capital or dividend is an issue, though it is opened up, but there are issues still.
There are issues.
So, but having said that, China has invested $625 million in FDI in 2019, which is 6 times or 5.5 times of Indian FDI. So how are Chinese managing these issues? What is their financing pattern? And if you can do a slight comparison for us, I mean, the idea is to know that what is holding up Indian FDI in Bangladesh and where we should improve upon.
Well, Bangladesh is not unfortunately, is not a very appropriate place to invest. What is the amount of the local investment? Very little compared to the size of the GDP and size of the GDP. So our investment GDP ratio is very distant. And India being the neighboring country and plus the same culture, they know our values very well. Indian business people, they know our values very well. And what kind of industrial sector they'll be investing. That is because if they try to invest in the service sector, so like there was Apple, we have a law that being an LDC so far, we didn't have to have any commitment in the service sector, investment in service sector. But we casually opened up to 2-3 service sectors like 5-star hotels, education, and healthcare. And IT. IT was not officially declared, but it came in anyway. Say, 5-star hotels are doing okay. There are many foreign investments coming in. But say for healthcare, Apollo was doing good business. They still have the establishment, but changed their name. So Apollo franchise have withdrawn, so to speak.
Okay.
Have they changed their name in India to Evercare, from Apollo to Evercare? I don't think so.
No. Apollo is a big brand.
So Apollo, that brand or franchise, they have withdrawn. Their presence is still there, but under a different name. Why? Because our law says for healthcare and education, they have to set up a trust, non-profit thing. Apollo is a business venture. They are not a non-profit thing. For them to accommodate a non-profit entity in a foreign land is not a very palatable idea. One example, same for education. There is investment from the private education board from Delhi. They call it Delhi Public School.
Yes, it's a very famous brand, Delhi Public School.
But for education, perhaps it's easier to do it as a non-profit. But how long, I do not know. And the size of investment compared to Apollo Hospital vis-a-vis the Delhi Public School is very limited, very small. Apollo, health healthcare needs more investment, and one single school, one single compound is minimal compared to Apple's
And it has
investment.
far more greater complexities also. Healthcare
Exactly.
is far more complex.
Exactly. So, okay, so for one single school in a single compound, perhaps a non-profit entity works out for a while, but not for an Apollo thing. So that's one example. The Indians may not, the service sector investment may not be very palatable. And for the manufacturing, for governments, there is unofficial embargo against foreign investment, except for the export processing zones, unless it's a joint venture, etc. But there are Indian investments in form of buying house and other like processing things, but it's not. And for the China, I will come back again on this issue. But Chinese investment, I believe, I could be wrong. I'm not so sure, but I think they mostly come in the G2G basis. G2G basis. And in China, there are private companies, of course, but there are government stakes in those private sector companies as well. So for Chinese investment, it's different. It's mostly G2G, like big infrastructure projects, also developments of
The government there puts it nominally in private sector. In the private sector that goes out, all prominent private sector since 2014
right.
or so. So they put their own members as on the board.
Exactly.
So they have the class. So these are not really in true sense, these are not private sector. These are the sector that operates for the government. So they have a political entity, kind of.
Exactly so. So Chinese investment has a different color or brand, like there's a different modalities. And also there are some Chinese investments in items like shoes and some textiles, some chemicals, these kind of things. So, I mean, since it's mostly government funds coming through private channels, their risk perception on investment is different than the risk perception of the Indian private sector investment. That's what I believe.
I understand. What is the status of the ACZs? I think Bangladesh proposed to build 3 ACZs for Indian companies. What happened to them? I don't hear about that much. Do you have any idea?
Well, right now I am working for an assignment for Bangladesh Economic Zone Authority. So I have to have regular interactions with them. So I was discussing their vision statement. In their vision statement, it's a publicly available information. They will open up 100 economic zones by 2030, and which will contribute, their vision statement says that which will contribute additional employment of 100 million people and 40 billion additional export revenue in the next 15 years. Okay. After all these 100 economic zones become operational. Mm-hmm. And when I wanted to mention these things, they said, no, we are having reservation about those statements. We are revising. That means it's not working out.
In fact, just asking you, for a small geography like Bangladesh, why do you need 100 economic zones? You can build exactly 5, 10. I mean, it's...
Exactly so. It was a statement, it was a decision, and they want to follow it through. And out of this 100, 97 have already started at different phases of development. For some, only the land acquisition have been done. For some land development are in progress. And out of this 97, some 69 are directly controlled by the government. That's the BEZA, Bangladesh Economic Zones Authority. And some 29 or 28 of them are leased out to the private sector. And out of this private sector, some are specialized to a, to a specific foreign country. Like for India, 3 have been earmarked. For China,
Okay.
2 have been earmarked.
So,
For Japan, one
so
has been earmarked.
what you are trying to, I think if I get you correctly, what you are saying is that these zones are not yet developed properly.
Not yet.
So the
And
question,
like 6 or 7 privately operated, like leased out, privately operated are already operational. Small ones, they're small ones, like 100 acres, 125 acres, things like that. Not like
that is understandable. When you go for so many, it has to be very small. And
Yes.
for a ACZ, that defies the logic though. Ideally, it should be one big place,
Right.
because if you put up a factory, even a medium-sized factory, it might take you 10 to 15 acres.
Right.
I'm living in a society which is on close to 18 acre. So if you have a ACZ of 100 acre, then how will you accommodate? So these are issues, definitely. Now let's go to a little broader macroeconomic issues. Part of it we have already discussed. Like, in theory, Bangladesh's macroeconomic fundamentals look fine. As we are discussing about this is of course ITC mirror data, that a huge and Bangladesh is a big success in export front. It has made its name there. However, we have seen Sri Lanka, which has the most diversified basket in the region after Sri Lanka, and that includes a very thriving service sector with tourism, right? That had failed that fell to this whole uncertainty and trouble. Bangladesh is a single product country, and tourism is barely there. Forget about foreign tourism. How sustainable is this export performance? Do you see any risk here?
The risk is there, of course. It's a very high risk. This is a wonder how we have been able to sustain our single product exports so far. Just one statistics that government sector enjoys about 60 or 62. The figure is in the ballpark of 60% or above. 60% of the total bank loans available in a year. So it's easy to see a crowding out effect for other sectors. It's easy for the bankers to make decisions. They see the export orders or export performance of the applying company, and if they find it satisfactory, they know the exports will be coming in the 3 months and the next 6 months. So they feel it less riskier to finance that company.
But that is about the domestic side. But how about the export side?
I'm talking about the export side. Those export-oriented government companies, they command over 60% of the total available bank finance.
Yeah. No, what I'm saying is that when you have, this whole 85% of your export basket depends on RMG, and as we have seen in the world, the industry shifts, low cost players do come. So last year, I think we have seen a news that Vietnam replaced Bangladesh as the second largest ready-made garment exporter. Now, what is the kind of risk that you think Bangladesh runs in the medium and long term?
In the medium run, well, when the impact of COVID started, I made a prediction that RNG exports from Bangladesh is a matter of the past. You can consider this from now on. Maybe I was little too negative, because for such a large industry to be to relocate or to wipe out, it takes longer than that. It takes 3 to 5 years. But Vietnam took over Bangladesh and became, was into the second position for a few months. Then it again switched to the third position. And it happened once before, a few years back. I think it was around 2018 or 2019. So for a brief period, Vietnam rose to the second position, then again came down to the third position. So it has, if I'm not very wrong, it has happened twice so far. And Vietnam's size and growth rate is almost double. I mean, Vietnam's apparel industry's growth rate is almost double than that of Bangladesh.
Okay.
And they cater to the higher end or higher value added portions of the global apparel industries. And another thing we have to keep in mind, in the European Union at least, Vietnam does not enjoy the duty-free quota fee as Bangladesh does.
Mm-hmm.
Once Bangladesh graduates from the LDC status and that 3-year period is transition period is over, which will be done in 2026, 27, then Bangladesh should be facing the MFN duty rate in the EU market. Now, after the Brexit, it's 27 member EU bloc. But currently, Vietnam faces 9.6%. So even that, though, Vietnam is doing better than Bangladesh for many items. For the USA, Vietnam enjoys GSP, Bangladesh does not.
Okay.
So Vietnam will very likely overcome Bangladesh in the global as a global supplier. They will be in the second position and in a stable manner. If Bangladesh does not play the cards well, it's not only the government, the manufacturers, I mean.
And Vietnam is very well placed because it's not a apparel based exports. They have many other products.
Right. And the weight of the apparel or the share of the apparel products is like, I don't remember the correct figures, but it's like 10-12%. It's not as high as like 85%.
Yeah, it's pretty diversified export basket.
Yes.
So, so of course, Vietnam so if I take the gist of your assessment is that yes, we all know that it will be Bangladesh and Nepal will be graduating into from graduating above the LDC level by 2026-27. So that will be the time when we will that will be the time to assess the export competitiveness of Bangladesh in the European market. Now, so that means that before that or by that time, so in say let's put it in 5 years, Bangladesh have to diversify its product basket.
We should have done it at least 2 decades back, but we have not been able to do so. Right now, so many consultations, so many assignments, so many work, in the line of meeting the LDC graduation challenges. I just had one seminar yesterday. I was the facilitator. Tomorrow I have another one. So it's a big challenge, especially in the EU. And not only the export, we have to align our local laws and regulations and also financial practices, financial systems, standards, many things with that of the international standards. Like right now, to protect the domestic industry, we do not go to the process of imposing countervailing duty or anti-dumping duty. What we do, we impose para-tariffs in form of supplementary duty, regulatory duty.
Very high.
As an LDC,
para-tariffs are very high in Bangladesh.
Very high, yes. As an LDC, no one cares. But when we graduate from the LDC status, these will raise questions and they will raise objections from the international trading partners.
So it will be under greater scanner, and already Bangladesh is, because of its success, because of its high exports, it is already under the scanner, but they will obviously get the opportunity as and when you graduate. So it will be very interesting. And you have rightly said the accounting practices are very, very important. I remember how the Indian banking system, the accounting practices graduated to meet those standards.
International financial standards, IFS. Yes.
Yes.
We need to do that. We have to change we have to reform and update our intellectual property rights laws.
That's a very extremely gray area in Bangladesh, and the IPR, and that is holding on, I think, spread of many things, many businesses, particularly all the knowledge-based businesses, which bring a lot of value addition. So they won't go. They won't go. Now, that is the second part. You made a statement that Bangladesh should have done it 20 years ago. I mean, that is linked to my, you have been also saying that the market is overcrowded by the ready-made garment sector. And it's, it's like that boy in the house who earns maximum. So naturally he gets all the attention, and the kid who is tomorrow's citizen may be missing out on attention.
Right.
So is that how intense is that case in Bangladesh? To what? Because this is also important, because you and me will agree, probably. I mean, you will probably agree that it is not economic numbers, but it is political economy that matters most, right?
It does. It does.
So the clout, beyond the balance sheet, the clout in the politics and everything. So that makes a lot of that tilts decisions in your favor, right? So everywhere. Now, given that, to what extent RMG is making the life of all other initiatives difficult? Finance is one, you said.
Yeah, finance is one. Another one is policy framework, regulatory framework. I mean, all the incentives, direct and indirect, they favor the RMG businesses. There's one thing that look at our traditional manufacturing sectors like jute. It's a dying thing globally. It's a dying thing. I mean, there is a kind of renewed interest in the natural fibers, but it's costly. So, I mean, you really cannot revive jute to its former glory only through making ropes, twines, and those Hessian bags, unless you find a more value-added end use for jute, which has not been done. And we had like some sectors, Bangladeshi people used to take pride, but they are very small, like tea. We now import tea. There was the frozen shrimp and all that. Now our quality have deteriorated, and for frozen shrimp, frozen food, there is an like incentive mechanism. If you export this much, you get the cash incentive this much percent, 7% or 10%. That also nurtures inefficiency. They are feeding on that cash incentive for the last 50 years, 40 years. I have seen the balance sheet of publicly listed companies, publicly traded and listed companies. They pay, I'm just giving the example, they paid some 7.5 million taka as taxes in a particular year. And in that year, they received 750 million taka as cash incentive from the government, so 100 times more. 75 crore taka as cash incentive received from the national exchequer, and in exchange, they paid something like 75 lakh taka to the government as tax. For this classic.
So it's very, very, very clear that the profit delta is coming from incentive. If the profit delta comes on incentive, then instead, it's good in the beginning to encourage, but
Exactly.
it has to be extremely time bound. For example, India has launched its PLI scheme, right?
Mhm.
It's time bound. After 4 years, the benefits will
You can
dry.
get it. But this
Yeah,
company is a large company. It's they're getting it for the last 40 years, 30
so
years.
that means that the profit delta is coming from, is the government is giving them the profit. Simple. These are
Exactly.
subsidized
So it does,
industry.
exactly. So these are
So
the
that means the
sustainable.
government resources to promote other industries is less, definitely.
Exactly. Exactly.
And this industry is not competitive. So the moment the subsidy will go, they will fall flat on its face.
Right. We have another one like ceramics, porcelain. From the 60s or 50s, we have porcelain industry. We have been there, and there are some items that are exported in the high value market. You know, the fine tableware.
Bangladeshi ceramics products do come in India. It's a part of it. Little bit,
Yes,
I
little,
did fine.
but
And
it's a highly tariff protected. Some 129%. If you consider the customs duty, supplementary regulatory duty, once you remove that the tariff protection, this will stop overnight. Especially because we do not have the raw materials. We import those raw materials. So protecting a local industry for a brief period at the infancy period is fine, but to remain it protected for like 5 decades will nurture inefficiency. And any Indian
100%.
investor or any foreign investor will know that once the tariff protection is taken away, they don't have any future here.
Absolutely. You remember in the 80s, Nepal used to get the maximum Indian investment. Now that was simply because of the tax arbitrage.
Right.
Once the tax arbitrage had gone, all the investment had dried up. So that means there was no core competence in the area. I think we spoke a little long. So let me take you to the last point. Bangladesh, in recent years, Bangladesh has been a talking point, even in India. And one primary reason is, as you said, in the COVID year, when most economies, I'm not talking about leave out India, but even US, many economies suffered a shrinkage. Okay.
Yes.
But Bangladesh didn't. It grew by 2.4%, which was commendable in that period. But that is not the only thing. I mean, since then it is growing. The World Bank has expects it to grow by 6.4% this year. I think Bangladesh government claims that it will be much higher.
Right.
And which is a little interesting, because there has been, as you said, there has been a huge cost push. Now, Bangladesh has been a highly import dependent country. If I look
Yes.
from the Indian perspective, where even the food is imported. Right. So given that, it is a little, I mean, it's, I don't say the puzzling, but it's really interesting to watch that Bangladesh is defying these logics, and even the inflation is 6.2%. I think in March it was around 6.2 or 22, and it is in this, if you take the single decimal, then even in April it was 6.2. So restricting it in March and April, we saw the wildest movements in global trade, right? So what made the fundamentals look so strong and so exceptional?
Well, I mean, the question is straight. To respond to it could be a little tricky. Let me put it this way, that the data and the statistics that we see can be questionable, can be questioned. You may not get an answer. And the thing is, there is no substitute source for national aggregate data. Even the development partners, the World Banks, they may modify, they may look at the methodology and modify it a little bit, but officially they have to depend on the national statistics.
Absolutely.
They cannot have this. So I mean, it's the same for every country. Those
That's the norm.
multilateral agencies, exactly. So, and we have questioned many economists and researchers have questioned many times how is this possible, and we did not get any very satisfactory answer. So that is how it goes. Because as a consumer, as a householder, I know the costs. Yeah, and I can give you one example. Like, well, for food and non-food items, the inflation is calculated separately everywhere in the world. Yeah, and but even for non-food regular consumption basket like rickshaw fare, household other expenditure, things like soaps, for dishwashing liquid, in 6 months they have gone up by 80%. Especially during the COVID, from a 35 taka pack of dishwashing liquid, now they sell it for 55 taka. Sorry, 57 taka. From 35 taka to 57 taka. In a span of like a few months. There are many items like that. And that adds to the inflationary pressure. But still, we see the official statistics about 6%. So we cannot do anything about it. Same for the unemployment data. Our official unemployment rate is still below 5%. But here, at least some saving grace that we have another row called underemployment. So that is about 20%. So together, the underemployment and unemployment is about 25%. That makes sense. But for inflation data, it doesn't make sense to me. Sorry.
No, of course, but it happens often if you don't put everywhere, even in India, the inflation data is questioned because of the weightage that you give, because the consumer habits do change and then they don't change the weightages or they don't reshuffle the list. That is understandable. What is not understandable is how, even if it is an old day, what is not understandable, how it remains stagnant. And second is, I will say that it is highly laudable if under this tremendous cost push, this Bangladesh economy grows at 6.4% in 21-22, because India's growth at 8.7% in 21-22 came in April-March session. But what you are going to get is the last quarter from April to June will be washed out, ideally. So maintaining that high growth is quite laudable. Anyway, thank you for answering. And I think our session was due for too long. So thanks and wish you all the success.
Thank you. My pleasure. My pleasure.